All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. My apologies for the morning video here. It did not have audio, and thought we could get it back on, for the recording, but it has not worked. So I'm going to do take two here of this morning's video. Now, I didn't do a lot in the morning video. I basically showed what the scans look like, talked about Netflix, FCX just a little bit, and so just not a lot going on out there in the market right now. We have the pops and drops on China, U.S. news. Is China pessimistic? Are they optimistic? Is Trump pessimistic? Is he optimistic? And just that type of element going on, and that's not going to end. Right, I've made it known that I believe it's going to last for a long, long time, and it's just one of those things that's going to continue to be a risk factor for the markets. As far as what's on tap here this week, it's a very light week in terms of data. In terms of earnings, we do have the FOMC minutes on Wednesday, which could move things a little bit. The ECB minutes on Thursday, which probably won't touch anything. And then the PMI composite flash numbers here on Friday, which I do think will be market moving, as they will be the first look into November data that we have, okay? So, that's the stage here for this week. It's a pretty light stage, and one that, could get some pretty big reactions based on some of the rumors that come out in regards to the trade war. And if we look at just kind of the chart on S&P futures, you can kind of see when Europe opened last night, there was a positive report. We saw futures jump. Then there was a negative report. We saw futures drop, and futures just pretty much been, ticking around this level ever since. We do see the U.S. dollar down a little bit here this morning, with bonds up a little bit, but interesting to see gold up with the dollar down. Yeah, just some correlations that aren't typical, happening here this morning, but nothing to a major degree. I now have two positions on the board for the challenge. One is Netflix, which is up, about $8 here. Nice little breakout on it this morning. Now, there was some negative commentary out of SocGen this morning. I did post that into the message feed, so you can access it there. They basically said, look, it's we're still bearish on Netflix, and we'll continue to be bearish on Netflix. But I found something very interesting in what they said, and I'm going to see if I can just pull it over to the screen here. Yeah, here we go. So SocGen sees big downside in Netflix shares, with uniqueness eroding. A wider competitive set has started to dilute Netflix's perceived uniqueness and will possibly restrain its pricing power in the short term. SocGen analyst tells investors low price points set by Disney and Apple will likely make Netflix more cautious, exercising its pricing power. Further believes the company's 2019 price increases have had a slightly higher than expected impact on U.S. churn. The analyst keeps a sell rating on Netflix with a 200 price target. They have been bearish on Netflix for quite some time. And it's the bearish thesis, right? The bearish thesis is competition, competition, competition. And look, you've heard me rant on enough about competition when it comes to Netflix. And bottom line is Apple TV, Disney Plus. Those are positives for Netflix. They're not negatives. And it's just, this is kind of that same situation we see happen in other industries. We saw Amazon get sold off when they announced that they were going to join into the cloud and, launch Amazon Web Services, and they sold Amazon, said there's too much competition, right? Well, you can have competition when an industry is growing the way that it's growing, and they just kind of are missing the mark here, to where, the Disney, Apple TV, they're low price points, which only makes it more compelling to cut the cord and more compelling to add Netflix to, the home viewing experience. And so, anyway, that was the downgrade. Then here at the bottom, basically the analyst thinks Netflix will retain a dominant position in a rapidly expanding over-the-top market and deliver steady margin expansion. Really? Those are interesting words from bearish analysts. So, take it for what you want there with it, and yeah, is what it is. Okay. So anyway, holding on to Netflix, here, FCX is down about 10 cents here this morning with the rest of its sector. They're all down about the same. BHP Billiton and Rio and Vale, that they're all, kind of just doing about the same thing to, varying degrees, but, about the same thing here today. So not at stops, not at price targets on either, and not adjusting either there. Now the scans, we show those. I showed them earlier, but again, my apologies, no volume there. None of these are challenged triggers. Chevron, EOG, Valero, all on the downside with downside 3-7 crossovers. EOG has the potential to trigger. Chevron and Valero, they don't. And then on the upside crossovers, we have Ford, Pepsi, Juniper, Gold, and Twitter here, all with upside crossovers. None of them qualifying as challenge signals. Three potential, Ford, Gold, and Pepsi, all potential here. So we'll see kind of how that plays out later on today. With the challenge, I don't have cash to get into another position, so I would not be able to trade the next trigger. But we'll see where they end up here. All right. So again, my apologies about the audio here from this morning, or lack thereof. I'll be back on here with you this afternoon. We'll take a closer look at a few things, and we'll talk to you then. Take care.